Maybe the analogy that Marco had coined, which I think is very apt, is it's like running a submarine and you have to take turns splitting between being the radar and figuring out what's ahead of you and actually running the internals of, the ship itself. So
Precisely.
If you aren't paying attention to what else is out there, you might, run into an island, or you might be closer to, you might be wasting your time trying to optimize surviving at sea for another 3 months when an island's just around the corner. But if you don't spend any time on taking care of the ship internally and building itself, then, you won't survive.
Hey everybody, Tanner here with WAGMI Ventures. On today's episode, we have Calidora and Marco, who are the co-founders at Ostium. For anyone who's new, this is the WAGMI Ventures podcast, where we do snapshots with interesting builders, founders, and investors from across Web3. Check out wagmiventures.io to learn more about the syndicate behind the podcast. But for now, let's get into it with Marco and Calidora at Ostium. All right. Hey, everybody. This is the WAGMI Ventures podcast. I'm Tanner, and I'm here today with Calidora and Marco, who are the co-founders at Ostium. How are you guys doing? How's it going today?
Great. Thanks for having us.
Thank you.
Awesome. Yeah. Thanks so much for coming on the show. Ostium is so cool. So I know there's a ton of great stuff to talk about here. So I would love to start with you both a little bit, just by way of introduction, maybe just give the listeners kind of a quick window into each of your crypto stories and how it evolved alongside your professional lives thus far.
Yeah, sure. I'll sort of frame this in the context of our founder story, because I think the two are inextricably tied. So maybe quickly, by way of intro, Marco and I met at Harvard in freshman fall. Briefly for context, I actually originally was admitted to Harvard over 10 years ago, but I dropped out for 5 years to pursue my first career as a professional athlete. So when I came back, I sort of started from scratch and started all the intro classes, which is where Marco and I met. We met in intro econ, so Ec 10. Sort of one of the largest and most popular classes for freshmen at Harvard. I always say we were maybe the two most annoying kids in the class. I think we asked a lot of questions and had a lot of opinions. That was sort of the genesis of our meeting and our friendship. We actually, the first thing we ever worked on together was on a debate, which we were placed on opposite sides for this econ class. I still remember the question. I think it was debating whether or not China's GDP per capita would exceed the US's by 2050. So we worked on that together. And from there, I started trading together in the markets, both worked at the same hedge fund at Bridgewater. I worked on the team with the CIO, Bob Prince. Marco worked on the commodities team, mostly doing research on energy. And then from there, concurrently, while we were in college, traded together and fell down sort of the DeFi rabbit hole at the same time as we were falling down a lot of the rabbit holes in the traditional markets, specifically on the commodity side. Yeah, that's sort of our founding story and how we met. So yeah, it's been over almost 5 years now that we've been working together and trading together and learning.
Very cool. Okay. So with that context, I'd love to maybe jump right into talking about Ostium. And maybe to set the stage, could you tell us a little bit about the genesis of Ostium? Like starting with maybe just kind of conviction. Like how did you both land on the conviction that this was the right opportunity out of probably all the opportunities I'm sure you were considering? I can imagine there were a few. How did you land on that conviction that this was the one for your time and effort?
Yeah, sure. So I mentioned sort of us exploring and trading both in the traditional markets and on chain. I would say it was really twofold in the sense that we identified what we saw as an immediate problem on chain. So the ability to serve and fulfill some sort of immediate demand for users on chain. I'll get into what that is in a second, combined with the belief that what we were solving on chain ultimately had the potential to solve a real problem in the traditional markets as well. Which I think I'll let Marco talk a little bit more about. But on the first part, we first started thinking about this stuff, I think, way before real world assets as a term were popular or even sort of accepted as something worth exploring in the space. I think early on, we came in with a very strong conviction that if blockchains are going to become the financial settlement layer for all sorts of transactions, certainly they will need to support other assets that are not native to the blockchain. Obviously, the traditional markets from equities to commodities, other futures indices, currency trading is in the hundreds of trillions of dollars. And a lot of the systems and DEX designs, for instance, that we saw on chain were being optimized for good reason for trading and gaining access or price exposure to crypto assets. But we saw very little in the way of building any sort of support for off-chain assets, be it either through tokenization or through synthetic exposure, which is what we're focused on. Since then, RWAs have obviously become more of a sort of commonly used term and something that people are exploring. But still, that's primarily in the context of tokenization, so geared towards long-term holders. So you see this with treasury bills, like tokenized T-bills. That's primarily geared towards long-term holders that want some access to other sources of yield, namely off-chain yield sources. We're really focused on the trading portion, so building a trader-focused product that enables short-term and synthetic, so simply price exposure to these off-chain assets without needing to own the underlying. So to sort of summarize, I think, really identifying this problem that we saw on chain, knowing in the long term where things would go, the chain will need to support these sorts of assets. There's nothing really right now, and there's certainly nothing that's geared towards traders, despite the fact that trading is really what has product market fit in crypto. And then I think the last piece that really gave us the conviction that this is an idea that has not just short-term potential to serve the existing set of traders, but really can solve a deeper problem that's endemic to the traditional markets, was seeing the issues that we saw primarily in commodities markets, which I'll let Marco touch on a little bit more here.
Sure, I would love to delve into that. Yeah, so basically the solutions in the traditional markets are mostly like twofold. So you have like the big brokers that are connected to the traditional exchanges that have, I would say, very discrete solutions for traders, right? Like, so all the contracts have a very specific size, a very specific margin requirement, right? Which leaves traders like very little flexibility on the exposure that they get there. And beyond that, like, there's also a big problem with fractionalization for like a smaller retail investor that just wants to get like a smaller exposure to each one of those assets. That is not a good solution for them. And then alternatively, like all around the world, you can find brokers that offer like synthetic versions of these assets, but these brokers are often like really not reliable. Like they change margin requirements for the assets without prior notice. They have all these different like sort of account requirements for users, which really limits like their ability to build portfolios in a reliable way and hold trades for a long period of time at low cost. They often also apply spreads and other charges related to trading that are like an order of magnitude above like the underlying market. So because like the premium they charge for that fractionalization is really unacceptable in many cases. And this comes from a personal experiencing and like dealing with many of those brokers. And so I really believe that like the solution for this in the long term will be to settle these trades on chain, right? Because again, like in emphasizing what Caladora mentioned, like it's a solution that goes beyond the idea that crypto is not just like this ecosystem for digital assets, but a settlement layer, so that we can bring all the programmatic nature of crypto to these markets, right? So that traders know exactly what they're expecting out of the services provided to them.
I think the last thing I would add to that is that this is really like what we see in the commodities markets in particular, especially through the sort of synthetic exposure that Marco mentioned, is really a textbook case of what blockchains are good at solving. This sort of like lack of transparency, this lack of predictability in terms of what the conditions will be for traders. And this is manifested through things like closing positions that are held overnight if they're too in the money, to, as Marco said, changing margin requirements, unexpected spreads that are not clearly stated ahead of time. So this bringing back this idea of sort of like programmability and immutability and transparency, these markets are plagued by a lack of really all of that. And I think what we really saw is that this is like a textbook case of the sort of thing that blockchains should and will be solving in the longer term.
Very cool. I love that. It's actually a recurring thing on this podcast, recurring comment that people make, basically like, make sure that blockchains are extremely relevant or necessary for what you're trying to build, because it's such a difficult space to build in sometimes that you need to make that calculation early. And it's fascinating that Ostium seems to have done that quite well. So if we could maybe bow tie a little bit, maybe in your own words, like how would you both describe or sort of explain what Ostium is and what it enables kind of in its totality here?
Yeah, I'll say the simplest answer for a current on-chain trader is, or the tagline would be trade oil on-chain or trade any commodity that you want on-chain. The maybe more sophisticated answer would be, we are a decentralized exchange for gaining price exposure to underlying real-world asset markets, starting with commodities and Forex, but later extending to other asset classes, which we can talk more about in sort of our long-term vision. So we use oracles to feed in prices from the traditional markets. We use a DEX design that is oriented specifically around the constraints of these markets, which Marco will talk more about in a second, to enable traders to gain price exposure to the underlying asset, all of which is settled in USDC. So just in a stable coin, again, for sort of risk minimization within the context of the DEX's design. And allow trading basically in price exposure to these assets directly on chain.
Amazing. Super interesting. Hey everybody, quick thing here. We're excited to announce WAGMI Advisory, your home for all things fundraising, hiring, and partnerships. This is all about supercharging your project with the WAGMI network, consisting of over 20,000 executives, investors, and builders in crypto, all ready to come alongside your project to help it succeed. Get in touch at team@wagmiventures.io to learn more and figure out if WAGMI Advisory is the right fit for your project. Now, let's get back to the show. So, Perps DEXs, they seem to be really popular right now in crypto. Maybe could you talk a little bit about how Ostium will be different, and what does it really mean to be a DEX built for real world assets? And, maybe what kinds of design decisions were made and what kinds of trade-offs to enable what you built? I'd love to really just kind of get in the weeds a little bit here.
Sure. Yeah, I'll cover this question. So I would say all the decisions that we've made on the engineering side were meant to basically include all the constraints that these assets have. I can mention the two main ones, right? Like, as opposed to digital assets, these assets do not trade 24/7. So they're basically exposed to market open and closes. And also many of them do not have basically very liquid spot markets. So only the futures market is suitable, right, basically to bring on chain through an oracle. And therefore there's also other considerations like futures rollovers and basically caps on the maximum and minimum percentage of price change that these assets can undergo per day based on the restrictions of the underlying exchanges. So due to those constraints, we're pricing all of that in the engine that we're building to bring this prices in our DEXs, right? And so those are the two main areas that we're focusing on. But at the same time, I would like to emphasize how we're also focusing a lot on bootstrapping liquidity from the start. And we've built a funding rate system that is very consistent in minimizing the counterparty risk that the stake pool is going to play in our protocol, so that there's a funding rate that flows from the most popular side to the least popular side in a way that it always encourages parties and even institutional investors to come and close imbalances between long and short. And this funding rate is designed in a velocity-based system that is based to essentially be effective even during high periods of volatility. So this is something that we really optimized for in our DEX.
Love it. Super interesting. Okay. So, based on all that, I'd love to talk about your progress so far in building Ostium, and maybe even starting with the question of when can users start trading real world assets on Ostium?
Yeah, sure. So we're actually currently live on internal alpha. We haven't publicized this widely because it's mostly been for a sort of small set of users and traders and partners that we have that are currently testing out the DEX. But we are live on internal alpha on Arbitrum. We will be launching the sort of public beta, so opening this up to the public generally off of the whitelist in Q1 and early Q1. So keep your eyes open for an announcement coming very soon. And then we'll be launching on mainnet sort of pending audits and pending a lot of the feedback that we get from the public beta. So again, in Q1.
Cool.
Yeah.
Okay, awesome. So I'd love to talk about trajectories here a little bit. So post mainnet, maybe starting with shorter term goals for Ostium and the team, what does success look like there? And then maybe the bigger vision. Where do you see Ostium and maybe, even Perps more generally in a few years? Do we cross over with TradFi? Any of your thinking there?
Yeah, sure. So in the short term, we're focused on user metrics, right? Mostly the amount of unique users that we can bring to the platform, and obviously optimizing for the volume that we can bring. I also want to emphasize the special attention that we'll take on collecting user feedback at all levels. We have a system of feedback that we've already been using in our test nets that has been super helpful in sort of directing the product to what the traders want and are expecting. And this is going to be at all levels of development, even in the future price feeds that we'll bring on chain, right? And the future commodities that we'll list will be a function of sort of that demand and that feedback from the community. I also want to emphasize that we're going to use a lot of sort of hypothesis validation, especially regarding this liquidity flywheel that we're trying to generate. So we've obviously created a sophisticated fee system that is meant to increase the liquidity in the protocol in a way that allows us to expand the open interest so that we can support trades that are increasingly bigger. And obviously we need to achieve also sort of a critical mass of liquidity in the beginning to get us started. So it will be very important to assess the hypothesis we have there and adjust all the parameters in the protocol accordingly so that we can get to that next level of liquidity and expand the trade sizes that we can allow in the protocol. And then I would say, like, finally, again, focusing on all kinds of feedback that we will get, so that like all the changes that we will do on V2, either that be things like, the ability for traders to like split trades or add collateral or create like combos of trades or all sorts of things that we have hypotheses on them. We'll test them and see what the users think, and go from there to iterate in the protocol to add those features.
Yeah, so I just want to hop in here. Put simply, really the goal is to create the best place, period, for trading these assets. So be it off-chain or on-chain. As we said earlier, there's really no place to trade these assets currently on-chain. Well, there are options off-chain. They all have very clear issues, as we discussed, related both to fractionalization, but as well transparency and sort of predictability of the constraints around trading itself. So really our goal longer term is to be the best place to trade these assets, and obviously have that be on-chain.
Definitely. Yeah. Super interesting. Okay. So one thing that I thought was really interesting is your team seems to be taking a little bit of a different approach to many other crypto protocols by posting lots of macro focused content. For example, I think your team has a recurring series on your blog called the Macro Research Bites. And I'm curious how this interest in macro grew into a recurring series, and also curious if you could just talk a little bit more about the relevance of kind of the macroeconomic environment to real world assets.
Yeah, sure. As I mentioned earlier, Marco and I both came from more of a traditional markets background originally, having worked at Bridgewater, again, on my side, working on inflation and employment data with the CIO, and Marco's side working on energy research on the commodity side. So we both come from this love of markets more generally, traditional markets, and all of that framed in sort of the macro context. And perhaps, as I mentioned earlier, the sort of genesis of discovering these issues in the traditional markets in the first place was driven by our trading activity in the commodities markets, which itself was driven by a lot of the theses that we had about commodities as inflation hedges, some sort of geopolitical plays that we were putting out at the time, and just sort of, other sort of general macro trends, for instance, related to precious metals and their role in like battery manufacturing and so forth. So we came to the idea, and we both come from a background that is like deeply entrenched in macro. And it made a lot of sense for us, I think, both from a just genuinely we find this stuff interesting and think that we have things to say about it that other people might also find interesting, but also in terms of like a strategic positioning. We don't really see anyone else in DeFi. There's sort of like pundits or people in the space who have opinions on macro and write about those, but we certainly haven't seen any at a protocol level anyone do that. Most writing that's published by various protocols and the research that they do is specifically related to, either their DEX design or analyzing DEX design of other players in the space, which we are actually currently doing and preparing some content on, but we'll be doing more as we launch and we open source sort of more of the code and the design itself of the exchange. But there's no one really writing about macro generally and fitting all these pieces together.
Yeah, I would also love to add that, there's an over focus in crypto on like technical indicators as drivers for price. So there's a very extensive discussion like everywhere, even in like the several communities of the different protocols around technicals, which of course we also have in our Discord. And that's very healthy and very sort of like focused, especially for traders that have, I would say, a shorter time windows for their trades. However, like, both of us like have traded these assets before. They're also like heavily driven by fundamentals, especially for traders that want to hold their trades for a longer period of time, several weeks or months. So I think that discussion on the fundamental side has been missing out a lot in crypto, and we're trying to make that sort of like one of the flagships of our community.
The last thing I would add there is the assets themselves that we're offering are designed really to cater to a trader base that is interested in expressing a wider variety of market views, many of which are related to macro. So, we'll have gold for the gold bugs. There will be oil for anyone that is, wants to express a market view on, for instance, GDP as evidenced by, demand in the oil markets and so forth. So it's also really related to the sort of user that we expect to see on the DEX.
Super interesting. Okay, awesome. So one thing that I thought was great is your team went through the Alliance DAO Accelerator. I'd love to learn a little bit about that process and kind of your experience there.
Yeah, sure. We went through Alliance DAO. We were in the 9th cohort. I truly have nothing but wonderful things to say about the process and the experience there. We joined at a very critical phase, sort of right after we had decided to dedicate ourselves to crypto full time. Marco dropped out of Harvard. I wound up not joining full time at Bridgewater. So was sort of a very critical period. I think we were definitely the earliest team in the cohort. And yeah, I can't say anything. I can only say good things about the experience. The sort of hands-on support from Xiao, Imran, and everyone else on the team was really what we needed at that phase. And the sort of rapid iteration of ideas at that time, enabled by the conversations we had with them and the way in which they helped support us during that period was critical. So happy to recommend them to any team in the space that's considering joining Alliance.
Very cool. Okay. With the time we have left, I'd love to maybe take a step back and talk a little bit more about the space more broadly. And I think my first question might be, from a really like founder vantage point, how would you narrate kind of this moment we're at right now, sort of in crypto writ large? Like, how do you view the state of the space these days?
We're definitely at an inflection point. I spent a little bit of time talking about this earlier, but when we first started thinking about these ideas, we knew from the beginning we wanted to do something in the real world asset space, which at the time didn't even really have a name. A lot has changed in the past year. I think through the bear market, there's been a sobering and facing of reality and I would say, sort of consensus or like a decision to or shift towards focusing more on sort of deeper sources of value and thinking from first principles, like what the space has to offer. I think we're at a very interesting point where the fruits of a lot of that labor during this past, 18 months that have been pretty tough are now really coming to fruition. We're seeing renewed excitement and a little bit of froth in the markets. On my side, I think just really hoping and having my fingers crossed that the work that has been done in the sort of sobriety from the bear market bleeds into the sorts of products that are built and ultimately find traction in the bull market, and that this cycle is unique and differs from sort of the insanity of the last one. Marco, I don't know if you have anything to add there, but
I would love to emphasize how like bear markets really create like incentives for founders and for like all the builders to build things that can withstand them, right? And products that have like way that the use case is not just simply dependent on hype, but that target like real demand and solving real problems. So that's a lot of what I've been seeing from like all the builders around me. And I really think that I believe that the last bull market was also marked by like a lot of scams and hype and things that in a way like hurt a bit like the reputation of the crypto space. And I think that like the group of people that will sort of like bring new projects in the next bull market will be more curated towards building things that are actually useful for everyone. And I do think that I see way more people right now focused on bringing new users into crypto too, because that user acquisition was something that really like lacked in the last bull market because of the, I would say, flood of liquidity, right? That basically served everyone quite well, right? And there wasn't the same incentive to look for real users. And that's one of the things that I see everyone prioritizing right now.
The other thing I would add is I'm super excited about a lot of the infrastructural improvements that have taken place over the past 18 months and that I think are continuing to accelerate now. Obviously, cross-chain interoperability is a big one. Also, account abstraction. You see this, the various protocols that are working on account abstraction. You see updates on a monthly or weekly basis. The space in that respect, so I would say specifically the parts of the infrastructure that are designed to, and I think will very, very meaningfully improve the user experience and minimize the friction that is inherent to a lot of interaction with DeFi today, are set to hopefully, fingers crossed, set the stage for much easier onboarding of new users. I think maybe to complement what Marco was saying, given how tough it was actually to do anything on chain, to be honest, still is today, but we're getting there. You really needed an insane amount of speculation and sort of hype-driven speculation to bootstrap users in the first place that would be sufficiently motivated to go through all of the friction that is involved in, even just bridging from one chain to another. I think as, again, all of that whole experience, you don't have all these like separate execution environments. You have better interoperability within them. You have, much less friction in terms of even just submitting a simple trade, not needing to click confirm every time you trade, having sessions, for instance, within a DeFi app, all sorts of things that will minimize this friction. I think hopefully my hope and belief is that it will be much easier to onboard users that are not purely there for mercenary purposes, which, yeah, if you think about the incentives beforehand, given how much friction there was, it makes sense that only mercenaries would be willing to go through surviving all of that friction to use a product in the first place.
Yeah, I think terrific perspectives there. So, maybe one last question here, or one or two last questions here. I'm always curious, kind of, again, from your vantage point as founders, kind of on the ground, making things happen. I'm curious if you could maybe give yourself some advice that could be useful to others, maybe in a generalizable way. What's maybe one or two things that you wish you had known at the beginning of your sort of crypto founder journey that could potentially serve others?
On my end, I wish I had had more context when I started. And I wish I had given myself more time to understand context before diving into a particular implementation of an idea. I think, particularly in a space like this, things change so quickly that while keeping up with context can feel perhaps even, not only impossible, but maybe not a good use of time if things are changing so quickly. I think setting that baseline understanding of, like just simple stuff, really, like the history of like DEXs, like what the original models were, this like, different, like which chains, even from I'll give you one example. Like we originally were building on Solana. We wound it mostly because of the sort of like monolithic architecture and speed. We are now launching on Arbitrum. We made that choice sort of very deliberately, and it was definitely a tough one. I have huge respect and support for the Solana community, even though we ultimately made the choice to launch on Arbitrum first. But it would have been easier, I think, from the beginning to select the chain that made the right, I think, independent of any events over the course of the past year. Certainly launching on EVM chain made sense for us as a first launch, not forever perhaps, but certainly makes sense as a first launch. I think we would have come to that conclusion more quickly if I had had better context on the evolution of the space from like an infrastructural perspective and this like sort of modularity thesis and where that was going. Being able to catch the winds more quickly, the more context you have, you sort of hone your intuition better about where you think things are going. So hopefully that makes sense as an answer.
Definitely.
I want to dive even deeper on that and emphasizing that context is not just something super, super important in the beginning when you're building the idea, but it's also like a really interesting balance that founders need to find between going heads down and like building something and bootstrapping all the ideas internally, right? But at the same time, keep the pace of the whole system around them and understanding in what way is context changing, right? And in what way we should sort of like update like all the tech stack to like basically address like the direction of the space in general. And this is like extremely hard to do, right? Because there's always a trade-off. Like the more time you spend trying to understand where to go, like the less time you have to actually build and dig down that rabbit hole, right? And so basically like having almost like sort of that complementary work between founders on both like digging deep the rabbit hole and understanding like what is the new context out there, which I think like the two of us have been doing in this complementary way has been like extremely helpful. So yeah, this is something I would advise everyone building in the space.
Yeah, maybe the analogy that Marco had coined, which I think is very apt, is it's like running a submarine and you have to take turns splitting between being the radar and figuring out what's ahead of you and actually running the internals of the ship itself. So
precisely,
if you aren't paying attention to what else is out there, you might run into an island, or you might be closer to you might be wasting your time trying to optimize surviving at sea for another 3 months when an island's just around the corner. But if you don't spend any time on taking care of the ship internally and building itself, then you won't survive. So
and no industry like actually iterates faster than this one, right? So this is like uniquely important to people building in the space, especially in DeFi.
Definitely. I think that's an amazing analogy and all excellent advice. So I think really, really valuable stuff. So maybe one last question here. If people are curious to learn more about Ostium and the team and maybe even get involved themselves, what's the best way for people to follow along the journey?
Yeah, sure. We have a Twitter, or an X. You're welcome to follow us there. We also, as you mentioned earlier, we have our Macro Research Bites series, which will be coming out with a new one on inflation very soon. So you can read our blog posts. Obviously, join our Discord. Alex, one of the sort of people working on our team, has a lot of trading ideas, which he's constantly sharing. Marco as well. So feel free to hop into that conversation. And then we'll have more stuff coming out soon. I think more specifically related to the internal design. I mentioned this earlier, but some research on sort of our choice of funding redesign, opening fee structure and so forth, which we're excited to share more closely to the beta launch.
Amazing. Calidora, Marco, thank you so much for the time. I mean, fascinating conversation. I loved getting to learn more about Ostium in this kind of detail and can't wait to continue following along myself. So have a great rest of your week here and take care.
Thank you.
Thanks for having us. Thank you.
Okay, bye-bye. Hey everybody, thanks for listening. If you enjoyed the episode, go ahead and maybe give us a good 5-star rating and subscribe wherever you're getting your podcasts so you can get all the latest conversations with the most interesting crypto founders, investors, and builders from across the world. Thanks so much. Have a good one.